Today is Monday, November 27th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, particularly with seasonal tendencies. What are the seasonal tendencies for stock index futures in December?
Okay, well, stock index futures have historically done well after Thanksgiving. Over the last 30 years, the average return in December has been approximately 1%, with the market making post-holiday gains approximately 75% of the time. We had the best December in 2010 with a rally of 6.5%, followed by rallies in 2003, 1999, and 1998, which saw post-Thanksgiving gains of over 5%.
And looking at the U.S. dollar, what's your outlook currently for the greenback?
Okay, well, the U.S. dollar has severely underperformed the news since late October and also in November. So we have seen a lot of technical damage done in that time period, with major trend lines penetrated on the downside. Some of the pressure can be linked to the belief that the Fed may be at the end of its rate hiking cycle. In addition, there's only been limited flight to quality buying coming into the dollar when there was a need for safe haven assets. So the dollar very much underperforming, and I think that the technicals remain weak as well. So I believe lower prices are in store for the dollar index.
Lastly, Alan, how about a rundown on this week's potentially market-moving reports?
Okay, on Tuesday, we'll have the November Consumer Confidence Index guessed at 101.5. Also, Tuesday, the November Richmond Fed Manufacturing Index guessed at a positive 1. Then on Wednesday, we'll have the third quarter gross domestic product revised at up 4.9%. And also Wednesday, the Fed's Beige Book in the afternoon. Thursday, jobless claims guessed at 219,000. And personal income in October guessed at up 0.2%. And then the November Purchasing Managers Index anticipated to be 45.1. And then finally on Friday, the November Institute for Supply Management Manufacturing Index predicted to be 47.5. But also we'll have Fed Chair Powell speaking a couple of times on Friday. So that might be probably potentially the most market-moving event on Friday with Powell speaking.
Thank you. Good morning, Mark. Let's look at the grain markets. What are the main factors that will drive agricultural markets this week?
Well, we're kind of in a quiet news time frame for agricultural commodities coming off Thanksgiving and moving towards the year end and the holiday season. We're still dealing with two wars. However, that really hasn't impacted agricultural trade as of late. U.S. crops, for all intensive purposes, have been harvested. I do not expect significant changes in production in the next USDA report in January. Competitive traders data from the CFTC was delayed until this afternoon because of the Thanksgiving holiday. And despite some weather challenges, crops in South America are getting planted. Bean plantings in Brazil have now reached a 75% complete area, and that is still 1 to 2 weeks behind normal. However, delays to date, I don't think are going to have much impact on the size of the crop, with most private estimates coming in above 160 million metric tons, and that is still a new record-size crop. I think the bigger impact will be on the second crop corn, as plantings late next winter, at the end of the winter, after the soybean harvest, and also looking at demand, that's just kind of running so-so at best.
And Mark, how are the U.S. ag exports stacking up against expectations?
Well, in corn export commitments to date, they are up 27% from a year ago. That's versus the USDA forecast of up 22%. And this is largely due to strong sales to Mexico. After being noticeably absent for months, China did show up as a light buyer of just under 3 million bushels of U.S. corn last week. I would not expect this to be the beginning of a surge of Chinese demand for U.S. corn, as they have been aggressive buyers of Brazil's record harvest now, really for the last several months. Wheat demand is quiet. Exports to date down 9%, in line with the USDA forecast. And despite a wave of sales to China just ahead of a meeting between President Biden, Chinese president, in the U.S. here earlier this month, soybean commitments are still down 20% from a year ago versus USDA of a forecast of down 12%. So really the shining star in ag exports for the U.S. continues to be soybean meal. Sales there up 25% versus a year ago. USDA is forecasting only a 5% increase, so that's likely to be revised higher. Meal exports just continue to benefit from last year's Argentine crop being so low due to drought.
Finally, Mark, magic question. Where do you feel the corn prices will find a bottom?
Well, corn just continues to grind sideways to lower. Prices this morning have slipped to new lows for the recent move. Spreads remain historically wide, basically telling farmers to store their crops if they can. The speculative community has a rather healthy short position. They just seem content to roll those positions forward until there's a supply problem that does emerge. We're challenging the 455 level, which I think is a key support area. On weekly charts, that was a low in September. And then on the monthly chart, that is representative of the 100-month moving average. And this is the level we have not been below since the fall of 2020. So if this level is violated, and to me it seems increasingly likely it will be, I think we could be setting up a test of the 4.25 level here for spot corn prices by early next year. But that's really going to hinge on South American weather. With normal rainfall here forward, that's what it required to get down to that level here for spot corn.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.